Hello guys, and welcome to my YouTube channel once again. So in this video I want to show you how you can easily find a high probability setup which you can use to hold trades. All right, in case you are a swing trader, this will be very helpful to you. And even if you are a scalper and then you want to learn how to get some high probabilities trade setups, this is a very important video for you. All right, so the first thing you do is you go to a very higher time frame, very high time frame, like the weekly time frame. Like today is Sunday, and the new week begins on Sunday. All right, so you just go to the market, just open your chart and see what the market has done. All right, you see how the previous week candlestick closed. Now you can see on this particular pair, you can see what we have is an indication the market will be buying this week. This is a very strong indication the market will be buying in this new week. All right. Now, before I come back to this particular pair, once you open your chart, the first thing you do is just go through all the pairs, because you'll find a particular pair that is in line with your strategy as you go through on the weekly time frame. So for example, now let's say I go to my first pair listed here, VIX 50 index, and you can see the market is buying. This setup indicates the market will buy, and then you just look for a very good setup. You go to a lower time frame and try to find where to enter, because you won't enter the trade here on this higher time frame. All you have to do is to wait for the market to, as it is buying right now. You can just go to a lower time frame, wait for a pullback to a good support zone, then you find an opportunity to buy, yeah, to join the buys. All right, and as you can see that the market did not come down to this level, or let's say the market closed and maybe broke below this level at this point, let's say somewhere here, then you'll be very sure that the market is actually going to sell the new week, to sell, because at this point we'll see this as a double top. That's what you're going to be seeing as a double top. Then the market must have closed below here. Then you just enter some sales, find some sell opportunities, then try to take your profits before the market gets to this level. Mind you, this is a weekly time frame, so you go down to a lower time frame to find your entry. Then, like on this pair now, let's say you can't find anything that matches your strategy, you quickly go to another pair, go to crash 1000. Is the setup there something that it doesn't match your strategy? Like right now, I can see an impulsive correction here. I can see an impulsive correction. You can see this impulsive move. Then the market started creating lower highs and lower lows. After creating these lower highs and lower lows, while it is still creating, what do you expect? You expect the market to sell, right? To sell, then back to a strong zone, then buy. You're expecting the market to break to the upside at a much later time. We don't know when it's going to happen, but we expect massive buys on this particular pair. And we are seeing this on the lower time, on a higher time frame, the weekly time frame. So, but what we are seeing, what the previous week gave us, you can see it gave us a sweep here with this candlestick. Then the market came here and created an equal low here. So at this point, the market might want to sell to a certain level before buying. The market might want to sell to a certain level. So for that reason, if you do not find this uncomfortable, but I can analyze to use this particular pair to trade, but you can just keep it. If it doesn't really match up with your strategy, don't try to force anything. You go to another pair, check what is there. It doesn't match my strategy. I go to another pair, crash 500 index, doesn't match my strategy. No, okay, I can just leave it. So you can do till you meet a certain strategy a setup that matches your strategy. Once you find a setup that matches your strategy, then you decide to stay there. Like for this one right now, what do we see? There's a chance the market is actually in fact, it's going to be buying. You can see the market was selling impulsively, then it bought a bit, then came down, created a break of a change of character at this point, I guess. Then market sold, and it's still coming back again to create another lower high, because I'm feeling the market will be creating an impulsive correction. The market wants to create impulsive correction, then finally maybe continues buying. That's what it would want to do. All right. So you see, once you notice something like this, and the market at this point, you can see like this one, the market is actually on a zone. You can see the market is actually on a zone. So there's an opportunity here, guys. What opportunity is that? You just quickly have to go down to a lower time frame to check what the market is doing. Is the market resting on that zone? Does it want to break above this zone? Or although if you go down to a lower time frame, this zone is going to be too large. Let me just quickly go down to maybe the daily time frame so that we see. Okay, you can see that this actually the zone. So the market is now creating an impulsive correction. I can see an impulsive correction here. Though this is a daily time frame, I can see an impulsive correction at this point. Which if we go down to the 4 hourly time frame, I see more clearly. Guys, you can see this impulsive correction here. There's an impulsive correction right here. So you can easily join your trend line, because what do you expect? On the weekly time frame, we expect the market. Well, let's go back to the weekly time frame. We expect the market to buy. On the weekly time frame, we expect the market to buy up to this level. If it can just break above this zone and close above it, we were expecting the market to buy and be targeting this particular zone here. So if the market decides not to buy, then pulls back, like now we are seeing an impulsive correction on a lower time frame, like the 4 hourly time frame. Then the market decides to sell, it may go far below this zone here. So you can just see and decide to maybe mark this particular level here. You can mark this particular level here. Then you go on that 4 hourly time frame. Let's go back to the 4 hourly time frame. Let's go to the 4 hourly time frame. Then you watch to see what the market wants to do. If the market can nicely break below this zone here, if the market can nicely come down and break below this zone here and close below it, then what we're going to be having is an opportunity to sell. So you just find an entry and take some nice sales, guys. Even if you can hold your trade, if you can patiently hold your trade, trust me, the market will nicely hit this zone and you take your profit. So this thing is something you can be practicing. If you can be practicing this thing on our pace every week, as the week begins, you just go to the market and check which one gives you which pair gives you a setup that is in line with your strategy on the weekly time frame. Then you try to follow it up. Trust me, there are weeks which the market is always bullish, and there are weeks the market is always bearish for a particular pair. And you'll be able to identify when the market starts to begin that is bearish or bullish move, you'll be in so much profit for that week, guys. You'll be in so much profit for that week, on that particular pair. So as it is right now, if you can maybe patiently wait and see that the market is coming back to break through this zone and do maybe a retest, then you enter your trade and set your stop loss. Remember, you must set your stop loss accordingly. Then allow the trade to run. Guys, you will see so much profit. You see so much massive profit, I'm telling you. All right, so it's very simple. And if you keep going on to a much lower time frame, you might end up making mistakes, especially if you are seeing this setup on a higher time frame. When you are going down to a much lower time frame, you have to be careful. Right now you can see what the market is doing. If you go to the 4 hourly time frame, see what is happening. There is a close above on that zone. The market has been wicking down from this zone, but finally this particular 4 hourly candlestick broke and closed above it. Then the next candlestick bought and then still closed above it, bullish. Now this current candlestick here, you see, is yet to tell us what it wants to do, because it has not gone above this particular high, and this candlestick will be closing, I think, in the next 26 minutes. This particular candlestick will be closing like this. So if it closes bearish, there is a chance the market would want to sell, and there's also a chance the market will want to buy. So to be on the safer side, you would want to wait for the market to either go and come back to do a retest. Trust me, if you trace to the left, you will find there must be a support, a little resistance zone that market would want to hit, then come back to do a retest, then you enter the trade. Or if you have a reasonable account size, you can just enter a trade as it is, then set your stop loss below this zone. If you want to go in for a buy trade, just set your stop loss below here. But if you're not comfortable with what you're seeing here, you can just wait for the market to buy, then be sure the market is ready to be buying, then you enter a buy trade. Else you wait for the market to break down here before you take any sell trade. Do not take a sell trade at this point until the market is able to break below this zone and close below it on this 4 hourly time frame before you think of entering a trade. Else enter a buy trade and just set your stop loss somewhere below here, then allow the market to run. The reason why I'm actually considering taking a buy is because of what I'm seeing here. You can see that on this time frame we still have a trend, a kind of a trend like this, which has been broken. You understand? And so we can see that as a breakout, and that bearish candlestick can be acting as a retest. So if we go down to maybe the 15 minutes time frame, that's what you'll be seeing. You can see that. So the market is actually coming down to, wow, the market seems to be coming down to do a proper retest, then it will continue buying. All right. So after, if you come to the lower, and secondly, there's another thing I'm saying. The market seems to be creating lower highs and lower lows. If the market keeps creating lower highs and lower lows, then trust me, the market is ready to buy. Just wait for it to do a little breakout or get to a strong zone. Let it get to a strong zone, then you take your entry, then you catch some buys. This video is not for to teach entries. I'm just showing you how you can easily get a high probability trade setup that can help you make some massive profits. You can hold your trades if you follow this way I'm doing it. I'm showing you guys, right? So it is very simple. You start from the higher time frame on the beginning of the week, then you look for a setup that based on the close of the previous day's candlestick, where it's closed and how it closed. Then you can determine the direction of the market. Then from there you follow it up. But if you are seeing this on, if you're seeing, you know that if you see on a higher time frame, you see that setup on a higher time frame, there is it means that if the market will be going bullish in the current week, then it will be going a very long way. Since you're finding this on a higher time frame, what is left for you is to find an opportunity to enter the trade. Just find yourself an opportunity to enter, get a good entry, then enjoy your money, guys. All right, that's what you will do. And also, let me just go back to the same weekly time frame. Let me just go back to the weekly time frame again. Now, and I was on this particular pair before. Okay, yes, you can see this now. You can see this one here. This market has always been closing and buying from this particular zone. You can see this is actually a support zone. Now the last week's candle, what happened? You can see the sweep, guys. This is a very nice sweep, guys. This is a very nice sweep. You can see this wick down here, and the body closed bullish right here. Then now the current week's candlestick did what? It sold a little to test this particular low here. Let me just duplicate, or let me just adjust this line to where we had this previous low. At this point, I am referring to this the low of this bearish candlestick. You can see the current week candlestick got there and started buying immediately. Now, what are we expecting? We are expecting some massive buys on this particular pair this week. So let's say the market has gone a little from the support. We can easily now go to a lower time frame. Let's show the daily time frame to see the structure of the market at that point. Then look for opportunities to enter, and also look at what is happening here. The market was creating an impulsive correction here on the daily time frame before it even broke to sell down. So at this point, there's a kind of an impulsive correction, though it's not too clear, but we can just try to adjust to have something good there, right? Okay, so now if you go down to the 4-hourly time frame, you will see, I think it's gonna good. Now we're having it more clearer here. So with this structure here, there's an indication that the market will be buying. The market will be buying. Now we can have this right here now. See what we have now, guys. On the 4-hourly time frame, see what we have. Now from now, what do we see? There's a breakout and there's a retest, guys. There is a breakout and there is a retest, and we are expecting the market to do what? To continue buying. Now from what we saw on the weekly time frame, where do we actually expect the market to buy to? We expect the market to buy up to this particular level here. The market should buy up to this level here, and if you go down to the 4-hourly time frame, it's a very long distance, and you can see you can hold this trade. If you can get a good entry, you can hold this trade up to this level, guys. You can hold this trade up to this level. So even with the minimum lot size, you will make some massive profit. And I will advise, if you want to hold these trades, if you think of holding these trades, try to look for try to use minimum lot size so that your mind can have some rest while entering this trade, so that you won't rush to close the trades when you feel you are so much in profit, or you see the market retracing. And also have it at the back of your mind that the market never moves straight, it goes up and down. So once it buys, then starts to pull back, do not panic. Just know that the market will continue moving. Once it hits the support zone, it will continue, it will reverse to continue the bullish move. So you can see the market will nicely get to your target and you make your profit. All right, so if you can just be doing this every week, you'll be able to get very high probability trade setups like this one here. All right, so now we have that there was a retest on this zone. The market broke, like, let's see what's happening here. Let's see here. You can see the market broke down through this zone, then came back above it. You see there was a consolidation here. Finally, the market broke out, then came back to retest this zone. At this point, you would have entered the trade. Let's say you didn't see that. So what you do now is to wait. Or if you have some reasonable amount, you can enter with the minimum lot size at this point. Just set your stop loss down here and you have peace of mind, guys. Let's just say, what's the minimum lot size for this particular pair? The minimum lot size, I think, is what? Let's say 0.01. Is it 0.001? No, 0.01. Yeah, that's the minimum lot size for this particular pair. So in that case, if you are taking a trade, let's say you take a trade at this point. Let me just try to place it right there. Let's assume placing it at the right place there. You see where my stop loss is. You are risking about $10, oh sorry, about 90 cents with the minimum lot size. Then if the market gets to this zone, you are making about the profit is too small. It's about $2.95, just $2.95. Now you might feel the profit is too small, but how about you try this with the minimum lot size, and so that you can just hold the trade to see that this thing I'm showing you works. Because if you're able to do this with the minimum lot size, then the market is able to, then you're able to make this profit. The market gets to this target, you see, and you try it several times and it works. You will see that you're able to increase your lot size to target more. So if you do this on this minimum lot size and you're able to make some reasonable profit, you see that you can easily try 0.1. With 0.1 you're making $29. Then your risk is just 8.9. Then with you can even increase your lot size to maybe 0.5 depending on your account size. This is over $100, almost $150. All right, and mind you, you will not just put your stop loss here. You'll be varying, you'll be trailing your stop loss. And you can even go to a much lower time frame to get a good entry. You can even go to a much lower time frame. Let's say maybe the 1 hour time frame. If you get a good entry there, let's see. Okay, maybe I'm not sure. Maybe you wait for the market to come back, because the market might still sell. I'm seeing a little trend here too. This looks like a little trend at this point. The market will be reacting to this trend here. Let me see if I can place this trend line correctly. So this indicates the market wants to, there's a bearish candlestick here. The market still wants to sell again to the downside. So you can just find an entry as it gets to this support zone. As it gets to this support zone, you can just get an entry, or you might even have to go down to the 15 minutes time frame to get a better entry and a reduced risk of losing. Like the stop loss will be smaller. And now you can see here on the 15 minutes time frame, there is an impulsive correction, guys. There is an impulsive correction that confirms that the market wants to sell first. You see, so the market will want to sell. As it sells to the zone, you can then put take your trades and take your buys at that point. Set your stop loss just below this zone. You see, your stop loss will be very reduced, while your profit will be far more than what you would have made if you took the trade on the 4-hourly time frame, guys. All right, so it's as simple as that. This video is too long, so if you can just keep practicing this, you will see that you'll be getting very high probability trade setups at least once in a week. And be making some good profit. All right, so please like this video, share your thoughts in the comment section, and also subscribe to this channel if you've not done that yet. Go to my Telegram channel and join. I'll be dropping high probability trade setups there from today, so that you can also be making good use of them to trade. And if you want to enroll in my one-on-one mentorship, you want to learn more, you want to learn very well, then you send me a message. Once you get to my Telegram channel, you find my direct contact. Then we will discuss how the mentorship is going to look like. All right, so till my next video, stay blessed and peace out.